Well, good morning, Jagat Rana here. The topic of the day is building financial resilience by insurance. Building financial resilience by insurance. So we all aspire to accumulate wealth, and the key to doing that is discipline. Discipline is about investing systematically and for the longer term, and more importantly, it is also about protecting our investments. But there are unexpected emergencies that may occur and may lead to either not being able to invest that month or even worse. We may have to liquidate some of the investments to meet those unexpected expenses. It is critical to ensure that we protect our investment planning against any such eventuality. Therefore, one should look at the insurance as a part of the investment strategy instead of just simple protection. So, when we view insurance as a strategic investment instead of an expense, we will not have to deplete our savings in the face of uncertainties, emergencies, or healthcare expenses, as we would already be insured. Hence, preparedness is key for a well-rounded financial plan. When we are prepared, investments focused on building wealth and purchasing insurance can work hand in hand without hindering the growth of either health, and life insurance also provides tax benefits under Section 80D and 80C. For example, the recent global crisis caused by COVID-19 pandemic is a testament to the true value of insurance as a risk mitigation and protective measure against such unforeseen events. So many individuals experience disruptions in their financial goals as they have to break their piggy banks to manage the escalating healthcare costs during this time. But those who had health and life insurance were better equipped to weather the storm. So preparing a safety net the right way is there. Tailoring health insurance for optimal coverage is the need. Imagine this. Say Mr. Rama is a middle class working professional from Punjab. He dreams of owning a perfect home one day, and he has been consistently setting aside funds for the down payment. But what if an unexpected health crisis costing about rupees 5 to 10 lakh arises during this saving period? This sudden impact on his finances could significantly prolong the time needed to save up for the down payment, potentially extending it by another 3 to 5 years. But let's say Mr. Rama has health insurance coverage of say rupees 10 lakh, costing around rupees 700 per month or roughly 8,000 per year. He can easily handle such unforeseen medical expenses and continue his journey towards buying his dream home without sacrificing financial stability. So always ensures to have sufficient health cover based on health, life stages, and investment commitments. Another critical factor to consider is medical inflation, and one must ensure that health cover is for the right amount based on the current and future medical costs. So one could also think of a cover amount as high as rupees 50 lakh or more. Interestingly, even 5 times increase in the cover amount will only lead to a 2-time increase in the total premium. So simply put, get the right insurance cover that is suitable for a lifestyle that won't compromise other investments and wealth creation plans in case of any medical expenses. So facing the financial impact of unexpected loss with life insurance can be there with anybody. Say for example, Mr. Srinivas, a resident of Tamil Nadu, made a significant investment in a rupees 60 lakh house by opting for a 15-year EMI plan. Now 6 years into diligently meeting the EMI commitments, his ultimately demise leaves his family grappling with the financial responsibility of setting this EMI for the remaining 9 years. So the lack of financial readiness to handle this additional monthly expenditure has resulted in the loss of both the house and Mr. Srinivas simultaneously. However disheartening this scenario may be, it serves as a reminder of the vital role played by term insurance coverage. Such coverage can provide families with the necessary support to navigate the financial impact of an unexpected loss and safeguard assets they are emotionally tied to. So term plan prove invaluable is ensuring stability in your family's lifestyle, even in your absence. Ideally, it is recommended to choose coverage that is 15 to 20 times your current annual income, or at the very least enough to cover any outstanding financial responsibilities such as loans, debts, and lifestyle expenses. So whether you are signing up for a term plan in the upcoming year or adding more to your existing coverage, it's crucial to align it with your family's existing lifestyle to shield them from the impact of a potential financial burden due to unfortunate circumstances. So in the past, purchasing insurance was often a difficult process due to lack of information and other documentation issues. Now the Insurance Regulatory and Development Authority is bringing lots of changes to ensure offerings reach everyone so that the vision of insurance for all by 2047 can be achieved. So to achieve this goal, it will be critical that insurance products are easy to understand, easy to buy. The most importantly, the best product suited to prioritize one's needs over everything else. So many families turn to life insurers for financial protection and for help building greater certainty while safeguarding against the unexpected. So access to this security creates opportunities and ensure stability from the generation to the next. A highly regulated industry with a nearly 200-year-old legacy, life insurance delivers essential protection throughout all stages of life, providing a safety net for families and small businesses. So after the pandemic and amid economic challenges, the need for this certainty was proven. Because changes in the taxation of life insurers affect the liability of carriers. To make family financial protection tools available and affordable. So there are 7 ways to cope with financial stress and build financial resilience. The occurrence of an unfortunate event can often derail some of the best laid plans. So handling such situations can be stressful and exhausting. It takes a toll on your physical and mental health. It can also affect your financial health. While it is important to address and find a way to cope with the physical and mental turmoil, One also needs to address how to deal with financial stress. Even during such times, it is necessary to keep building financial resilience. If you find yourself in a financially stressful situation, these are a few steps you can take to ensure financial stability for the future. Most people tend to have a fair idea about their financial standing. However, if you find yourself in a crisis, this would be an apt time to know how your funds are being distributed. Start with your investment portfolio. Check how much funds you have been parked in your emergency fund and your savings. So the status of the debt and evaluate your insurance policy. Then assess your financial goals. Because the financial goals tend to be time bound. If you are in a financial crisis, assess if you can push some of the financial goals to a later date. This will help in reducing some financial pressures. You can revisit the financial goal once things settle down and the crisis has passed. Then avoid debt. One way most people try to overcome financial stress is by availing a loan. It takes care of the immediate fund requirement. However, it also creates additional financial liability immediately. So, taking a loan would mean you would need to start repaying the loan amount immediately, and there would be an additional outflow from your income. So, instead of taking a loan, try to use the funds from your emergency fund account or your saving account. Then rethink your investments. Not every investment may generate high returns. Ask your financial advisor to help you understand how your investments are performing. If they are not performing well, it may be a good time to switch. It may be a good time to switch. Then, look for investment options that can help provide financial resilience and create a financial nest for the future. This can be in the form of a new saving plan like HDFC's Life Sanchay Plan. So, as a saving plan, it helps secure your family's future while helping create a legacy for them. So, this plan offers life cover, maturity, and death benefits and provides guaranteed benefits, payouts, a long-term income option of 25 to 30 years. Then automate your investments. Instead of manually making payments to your investments, try setting up an auto debit facility. This way, your investment will be taken care of even during a crisis situation. While it may affect your current financial situation, you will be able to build a financial nest for your family for your future expenses. Then reduce expenses. If you have already set a budget for your expenses, it may be a good time to evaluate as well. A financial crisis may not be the best time to splurge and spend money on the certain expenses. What you can do as an option is increase the amount you invest in your emergency fund for or repay and debt. Then invest in a good insurance plan. A good way to create financial resilience is to invest in an insurance or a term plan. Such a plan can help reduce financial burden for the future while safeguarding your wealth. For instance, HDFC Life Click to Protect Super is a pure term plan that can cover your needs and provide you with the benefits your family would need. You have the option of choosing additional cover for your spouse, option of increasing death benefits of up to 200% under life option, etc. So the only thing constant in life is change. Hence it has become imperative to build financial resilience. It may seem like a difficult task when you are under extreme financial duress. However, it can be done through proper planning and choosing investments that can work for you and provide you with a financial cushion to support you and your family. You and your family. So, the key challenge for individuals, businesses, and governments would be the building financial and insurance resilience in changing climate. It becomes important issue for the financial management to create financial protection and insurance means to manage the financial losses, reducing the economic impact of disaster events, and supporting better recovery. So, it becomes important to have the financial resilience through insurance. And that is not a difficult task. No way. It is the simplest method, rather. Because globally, financial inclusion has become a powerful framework for building financial resilience by reducing vulnerabilities and providing a buffer against adversities. In fact, most national financial inclusion strategies have expanded and now aim to enhance individuals' livelihoods and build more inclusive and financially resilient societies. So, a wide range of mechanisms are being employed to enhance the effectiveness of national financial inclusion strategies so as to promote financial resilience. And this is so simple because investing in proper products or suitable plans will give you the wealth, will keep your future intact. And sometimes, generally, there is a lesser chance to have one shot of disease during younger age. But as the age increases, immunity goes down and one becomes more prone to acquire diseases. People with standard 9 to 6 jobs often fail to keep themselves fit. So when so many factors are there, it will be smart to invest in a term plan and save significant amount of premiums on the policy taken. Money cannot replace any person or cannot achieve an upper hand over emotions. But it can solve a lot of financial needs like daily expenditure, education, and marriage expenses, etc. So if the policyholder is making a contribution or is the sole owner, term plan is very essential. And this will invest in one that can manage the financial needs of the family in case of death of the policyholder. So the feeling of savings and hard-earned money is a great, and when that saving comes from reducing taxes, then the joy is endless. So the term plans can help the policyholders to save taxes under the Income Tax Act and make your future secure at the same time. So this is the simplest form of an insurance policy available in the market. Generally, there is a chance that money cannot replace any person's or cannot achieve any upper hand. But an investor can never predict the financial needs because emergencies can come anytime. So what can be done? One can always prepare for those emergencies or any other known needs from now on. Investing in a term plan can be fruitful in the long term. Thank you very much.